Timber REITs are a special kind of real estate investment trust. The regular REITs we talked about earlier own buildings and make money from rents, right? Timber REITs have a large amount of land, and what they do with that land is they grow and harvest trees. Trees are sold to lumber mills or paper producers. Now, just like the other kind of REITs, these timber REITs don't have any entity taxes so long as they distribute most of their earnings. But unlike regular real estate REITs, the yield that they do distribute to their shareholders is taxed as a capital gain. So it's much lower tax rate. And the reason it's taxed as a capital gain is that what timber REITs make their money from is growing an asset, and a tree in this case, and selling it. So in the eyes of the IRS, that is a capital asset and therefore subject to capital gain taxation. So timber REITs have high yields that are attractively taxed compared to the regular real estate REITs have high yields, but those dividends are taxed as ordinary income. And then finally, the other thing that's very unique about timber REITs is timber REITs are absolutely subject to the economic cycle. So if the economy is hurting and home builders are not building very many homes, the demand for lumber is real low. If you were going to sell your trees right now, you'd get a very low price for them. So what do you do if you're a timber REIT? You simply don't cut the tree. So what happens if you don't cut that tree? Well, it grows bigger. So the tree, meanwhile, is growing bigger while you're waiting for the economy to get better. So let's say the economy is in the dumps right now. You wait a year or two, and 2 years from now the economy is booming again. You then cut your trees. Not only are you going to get a higher price for your tree than you would have if you sold it today, but the tree itself is bigger and thus more valuable, has more wood in it than it did today. So that's an interesting way of mitigating some of the economic volatility. But most companies can't say that if they don't sell their inventory, it's going to get more valuable. Okay, so the drivers for timber REITs are going to be housing construction demand. Emerging markets get in here. China and even developed markets like Japan don't have a lot of forests, and so they have to import a lot of their wood, so that impacts the demand for lumber. When you're buying REITs, there's actually only 4 timber REITs in the United States. So you're going to take some individual company risk because you can't be completely diversified here, and there's always a risk of a wildfire on your company's, your REIT's land, or you can even have beetle infestations that basically destroys the trees. Big problem of that up in Canada right now. And so there are risks you're taking here, and that's why you certainly want to be diversified wherever you can be.